But you can see that the liquidity was taken below here, and then the event horizon was right here. There. And then ultimately, look what it did. It traded lower, and then we created a run into Monday's regular trading hours opening range gap. This one over here was just simply me using a small little wick. I used the consequent encroachment of this. I was teaching my youngest. Why am I using this? Because this candlestick is laying on top of this key level. So it's wick when price is trading down into it right here. Did we close on that candlestick below the consequent encroachment midpoint? Let me take all the levels off except for that. See, here's your screenshot opportunity. I want to know what your fib settings are. This guy is so generous. Look at this. He's full of himself. Listen to him. Consequent encroachment of this wick. That candlestick closed below it right there. So now it's easy. All you got to do is look for the volume imbalance in here or at this price level, get short. See if I can show it there. It's not, my little thing here is hiding it. You can see the price is up here. There's your price right there. That makes it easier. Okay. So the level is 24,856.75. That's the midpoint or consequent encouragement. I'm selling above it as a premium to that price. Part of that volume imbalance. Okay. Nothing random, folks. Surgical precision. Okay. That's what it is around here. And then ultimately just running for just the sell side liquidity right there. And you can see that happening there. Okay. So that's the business and what I was doing yesterday. And now let's just take a real quick look of something I said I was going to look at. Look how I used the Monday opening range gap quadrant and octant levels. Nice little reaction there. Completely random, right? Completely random. Runs up, trades down. We're using that level. That level. Look at this. Look at that. My goodness. Look at that. All the way down. Look at this right here. What's that? What's this low? 24,517 even. And it's one tick below the octant. Sell side, trading below sell side. Can it get to that next level? Or in this case, gradient level, lower quadrant? No, it reversed. That's bullish. Okay, it's the high of regular trading hours opening range gap from Monday's trading. So Friday into Monday, that's what we did earlier in the beginning of this live stream. And then ultimately sink lower and just trade outside of Monday's opening range gap. Back in, now we're back in sync. Look, lower octant, upper octant, that octant there, there, there. Look at all the work right here. And pumped up, back down in. Where's the bodies? Staying right there on that octant level. Pumped up into Thursday's first presented fair value gap. Now, what happens if you just relax and you're not trying to trade every candlestick? What happens when you start looking at price at these levels at the time when price should start spooling? Macro times. What do you think happens? All the ambiguity, all the uncertainty, all the fear, all the things that you're worrying about, these missed moves. I'm afraid I'm going to miss this move. Why? What are you afraid of? What you're fearing is the result of you executing on ignorance. That's what you're doing. You're afraid of the pain you're going to inflict on yourself because you don't know what you're doing. You're doing that. You're not afraid of your model not working because you don't have a model. You're not afraid of your process and protocols failing because you don't have any. You're guessing. You're chasing price. That's all you're doing. And when you show me your executions, many times that's what's proving it to me. And the ones that talk about how they took trades and they don't show their executions, I completely ignore entirely. So you have to be honest with yourself. Why do this if you're going to be lying? You want to do it the right way. You want to pursue this correctly. The right ways all the time, the best way. And it may feel like it's moving slower for you, but having these levels in price action and then coupling them with time, everything unlocks. The setups that you want to be a part of, you'll be able to see them coming beforehand. You'll anticipate them. You'll not react to it. You're predicting them. Where's liquidity? Where's the inefficiency? Are we discount to premium or premium to discount? Where's that fit in the narrative of what price may be doing right now?